What happens when the world's two biggest economies lock horns over trade? The ongoing tariff battle between the US and China is not just about taxes on goods. It's reshaping global markets in surprising ways. From soaring prices to disrupted supply chains, this trade tug-of-war affects businesses and consumers everywhere. Recently, a temporary 90-day tariff reduction was announced. Could this signal a shift toward calmer waters, or is it just a pause in a bigger conflict? In this video, we'll break down how these policies are shaping the future of global trade. Let's get started. The US-China trade war. A brief overview. The trade conflict between the United States and China began in 2018 and quickly escalated into what many call a trade war. This battle started when the U.S. government imposed tariffs, extra taxes, on many Chinese goods imported into America. The goal was to reduce the trade deficit, which means the U.S. was buying more from China than it was selling to China. Additionally, the U.S. aimed to protect American businesses and intellectual property, accusing China of unfair trade practices like forced technology transfers and theft of trade secrets. China responded by placing tariffs on American goods, such as soybeans, cars, and electronics. This back and forth led to increased costs for businesses and consumers on both sides. For example, American farmers lost buyers in China, and companies faced higher prices for materials and parts. This tension didn't just affect the two countries, it sent shockwaves through global markets, disrupting supply chains and creating uncertainty for investors worldwide. The trade war intensified under the Trump administration, with multiple rounds of tariffs announced. In 2025, President Trump issued Executive Order 14,257, imposing a 34% reciprocal tariff on Chinese imports to pressure China into changing its trade policies. China retaliated with similar tariffs, escalating the situation further. This ongoing conflict set the stage for a complex economic battle with worldwide consequences. The 90-day tariff reduction agreement. In May 2025, after years of tension and tariff hikes, the U.S. and China agreed to a temporary reduction in tariffs. This deal was announced during high-level economic talks, signaling a possible step toward easing trade tensions. Under the agreement, the U.S. reduced its reciprocal tariff from 34% to 30%, suspending 24 percentage points of the tariff for 90 days. China followed with a similar suspension on tariffs for U.S. goods. This 90-day tariff reduction is not a full resolution, but rather a pause to allow both sides to negotiate further. It provides some relief to businesses and consumers who have been feeling the pressure of higher prices and disrupted supply chains. Companies that were struggling to keep up with increased costs now have a small window to adjust. However, the temporary nature of this agreement means that if the U.S. and China fail to reach a more permanent deal, tariffs could quickly return to higher levels, worsening economic uncertainty. Both nations remain cautious but hopeful that this break can lead to more constructive discussions. Meanwhile, the global market watches closely, as the outcomes will influence trade policies far beyond just the U.S. and China. Impact on global markets. The ongoing trade battle between the U.S. and China is shaking up markets around the world. One major effect has been on global supply chains. Many companies depend on parts and materials from China or the U.S., so tariffs force them to find new suppliers or move production to other countries. This leads to higher costs and delays, which can affect product prices everywhere. Consumers are feeling the impact too. Tariffs increase the price of imported goods, meaning everyday items like electronics, clothes, and food may cost more. Sometimes, businesses absorb these costs to keep prices steady, but this lowers their profits. Stock markets have become more unpredictable because investors worry about how the trade conflict might hurt economic growth and company earnings. This uncertainty causes ups and downs in the markets. Countries around the globe are responding by adjusting their trade strategies. Some strengthen ties with the U.S. or China, while others look for new markets altogether. The U.S.-China trade dispute is reshaping global trade and economic relationships worldwide. The role of technology and rare earth elements. Technology has become a critical battlefield in the U.S.-China trade dispute. The U.S. government has placed strict export controls on advanced semiconductor technologies to limit China's ability to develop its own chips and high-tech products. Semiconductors are essential for everything from smartphones to cars, so restricting access affects China's tech industry significantly. Ironically, some experts believe these restrictions have encouraged China to invest more heavily in its own technology development. Instead of slowing down, China is working harder to become self-sufficient in producing semiconductors and other advanced technologies, which could reshape the tech industry in the long term. Another key issue is rare earth elements. These are a group of 17 metals crucial for manufacturing electronics, batteries, and military equipment. China controls the majority of the world's rare earth supplies, which gives it a powerful strategic advantage. The U.S. and other countries worry that relying too heavily on China for these materials could create vulnerabilities in times of political conflict. Efforts are underway in the U.S. and elsewhere to develop alternative sources and recycling programs for rare earth elements. The competition over technology and resources adds another complex layer to the trade war, influencing economic and security policies globally. Economic implications for the U.S. and China. The tariff battles between the U.S. and China have clear economic consequences for both countries. In the United States, tariffs have increased the cost of imported goods. According to the Tax Foundation, these tariffs act like a hidden tax, raising the average household's costs by nearly $1,200 annually in 2025. Businesses that rely on imported parts face higher expenses, which can lead to reduced hiring or increased prices for consumers. China has also felt the strain. Reduced exports to the U.S. have hurt Chinese manufacturers and exporters, slowing economic growth. The International Monetary Fund has lowered its growth forecast for China due to the trade conflict and related economic pressures. This slowdown has ripple effects worldwide because China is a major trading partner for many countries. Both nations face a difficult balancing act. On one hand, they want to protect their own industries and push for fair trade practices. On the other hand, prolonged tariffs risk damaging their economies and hurting consumers. The uncertainty makes it harder for businesses to plan for the future, leading to cautious investment and hiring decisions. Global reactions and adjustments. The trade tensions between the U.S. and China have caused countries around the world to rethink their own economic strategies. Japan, for example, has expressed concern over the impact of U.S. tariffs on its export-driven economy, leading it to downgrade its economic growth outlook. This reflects how even countries not directly involved in the trade war can feel its effects. The European Union is actively working to secure trade agreements with both the U.S. and China, trying to maintain good relations and protect its own economic interests. The EU is also pushing for more stable and transparent international trade rules to reduce the risk of future conflicts. Many developing countries are seeking new trade partners and diversifying their markets to avoid being caught in the middle of the U.S.-China dispute. This has encouraged growth in regional trade agreements and economic cooperation outside of the two major powers. In summary, the U.S.-China trade policies are reshaping global economic alliances. Countries worldwide are adjusting to a new trade environment marked by uncertainty, competition, and the need for greater flexibility. This evolving situation will continue to influence the global economy for years to come. The U.S.-China trade policies continue to shape global markets in powerful ways. While the recent 90-day tariff reduction offers a brief pause, the core challenges remain. How this trade tug-of-war will unfold will impact economies worldwide for years to come. If you found this video helpful, please like, share, and subscribe for more insights. Thanks for watching. Until next time, stay curious and keep learning about the world around you.